Hey y'all, it's Erica Hill West with Lending Path Mortgage, your mortgage go-to gal. I've been in the mortgage industry for over a decade. I also host a local radio show in Columbia, South Carolina, and I manage 5 loan officers. Today we're going to talk about, can I refinance my home mortgage and my home equity line together? There are some things that you need to know about interest rate, terms, and equity before you make this move. So please tune in so that you know more about how to refinance your home mortgage and your home equity line together. So some of you may be wondering, can I refinance my home mortgage, my first mortgage, some people call it your first mortgage, and my home equity line mortgage together, or sometimes it's called a second mortgage? And the answer is yes. However, the type of refinance that you're allowed to get to combine them into one will be determined based on when your first and second mortgage were acquired. So if you purchased your home with a first and second mortgage, meaning you closed both of those mortgages at the time that you acquired the home, it is considered a rate term refinance. And I'll tell you why that's important just a little bit later. But remember that if you purchased your primary mortgage before you got your home equity line, yes, you can refinance them to put them into one mortgage, one monthly payment, but it's considered a cash out refinance. That is the most important thing when you're looking at refinancing to push together 2 mortgages. Some of you may be wondering, what is the advantage of refinancing my first mortgage and my second mortgage together? I'm about to tell you. So typically home equity lines or second mortgages are interest-only loans that are variable. What that means is that the money that you borrow on that home equity line is not at a fixed rate. That means the rate changes based on what's going on in the market. And for the last 21 months, interest rates have been really, really low on home equity lines of credit. So people decided to capitalize on that, take their equity out in a home equity line of credit, make repairs to their home, pay off debt, pay for kids' college. And now, as interest rates are going up, guess what's happening on that home equity line? The rate's going up and the payment's going up. And most likely the payment on that portion of money is only interest. You're not even touching the principal. You may have done some research and seen that even in the last 12 months, your home value has increased. So you're thinking, I want to push these 2 debts together to have one convenient fixed monthly payment. This is how you do it. So if you purchased your mortgage, your home, with your first and second mortgage together, that is considered a rate term. When you are getting a rate term refinance, the interest rate is lower. It is comparable to purchase rates, which can save you a ton of money over a long time. So we're going to refinance your home. Most of the time, you will have to get a new appraisal. You will go through the same loan process as you did when you purchased your home. But at the end of it, you'll have one convenient payment to make, not 2. However, if you purchased your home, first you got your first mortgage, and then years down the line, you decided you wanted to tap into that equity to pull out money to pay for other things, you will be classified as a cash out refinance. The reason why this is important is that cash out refinances, those interest rates are higher than rate term refinances. Not only that, you are held to only 80% of the appraised value that you can actually take out. Meaning, your first and your second mortgage together have to be 80% or less of whatever the house appraises for. If those 2 together exceed that value, you can't refinance. There are a couple factors that you need to know when you're looking at how to choose a lender to start shopping for interest rates when you want to refinance your house to get your mortgage into one payment with 2 mortgages. First thing, you need to know if you have a rate term or a cash out. We just talked about that. So now you should know which category and group you fall into. The second thing to do is to be able to get a good idea of what your home is worth. A lot of people don't know this, but in the last 2 years, lenders have used a tool to be able to determine if the property value is there in the property. So the next thing to do is to contact a local lender. Have them run your property to see what its approximate value is. If they tell you that the system came back and said we need an appraisal to determine that, that is what will have to happen. Sometimes they'll be able to say your property's at least worth X. So that's the second thing you need to do before moving forward. So if you have enough equity to move forward without sometimes paying out of pocket for that appraisal, please, and I'm going to say this maybe 3 times throughout this video, do not use the Zillow value as your value. The Zestimate, I think that's what they call it, the Zestimate. That's not your value. The other thing that you can do is reach out to a local realtor. Have them do an analysis of closed sales in your area based on comparable sales to your property to tell you approximately what they think your home would be with. Take all that information, call a local lender. You can also reach out to your loan officer to help you connect you to a local realtor that can help you with that. Knowing those 2 things will make the process of refinancing your first mortgage and your home equity line a lot smoother. When you are looking at comps, please don't do this yourself. Please get a trained professional. Do not use realtor.com, Zillow.com, all of those things, because we all think, I don't know if you know this, we all think our home is worth more than it really is. Also, if you say, oh my gosh, this house down the road, it sold for X, so that means my house, because it's obviously superior, is going to appraise for this. That's not necessarily the truth. Because when appraisers come into a home, they don't have the emotional attachment to your property that you do. They're just looking at facts. So don't get upset if you don't think your house gets valued at what you think it is. It's very common. It's very, very common. But the good news is you can refinance that debt together to get one lower payment. You do not have to go back to a 30-year term. It's a question I get all the time. If I refinance my first and my second together, do I have to go back to a 30-year term? No! You can do a 25-year term, you can do a 20-year term, 15 or 10. There are a lot of ways for us to save money by refinancing 2 debts together. The other thing that you need to be concerned about is your credit score. If you're in the category where you have to do a cash out refinance in order to push your first and second mortgage together, you need to be sensitive about what your credit score is. Usually cash out refinances at 80%, they're going to require a little bit higher credit score than a rate term. So make sure that you know approximately what your credit score is, or if you plan to do this in the near future, you can contact a local real estate agent to refer you to a local lender if you don't know one. They'll be able to do a credit check. They'll be able to advise you on things that you need to do to get your credit score up. But make sure to keep that in mind when you're thinking about refinancing your first and second mortgage together. So in summary, it is absolutely possible to refinance your first mortgage and your home equity line of credit together. Just remember, when you push it into a fixed mortgage payment, you don't have access to that equity unless you refinance again. That's one of the benefits of having a home equity line of credit. Kind of works like a credit card attached to your house. Whenever you pay some money back, you have access to that money again. So refinancing them to push them into one payment would get rid of that advantage. However, there's so much more that you can gain from doing that, from pushing them into one payment. You know what your payment is every month, it's consistent, and you start working on paying off principal as well as interest. If you are looking to get a quote on refinancing your first mortgage and your home equity line of credit together, please give us a call at 803-999-3703 or visit us at www.ericahillwest.com. Likewise, if you're watching this video and you're in the mortgage industry and you are not happy where you are or you're looking for a change, we would love to talk to you. Or if you've been thinking, maybe I want to get into mortgages, please also reach out to us